Hello, they call me Mr. Fed. I don't know why. Today I'd like to discuss the end game. The end game scenario is a scenario that's very familiar to central bankers around the world. It's very familiar to economists around the world. But for some reason, for the average citizen of the United States and the financial press of the United States, it's rocket science. Nobody seems to understand what the end game could well be and what the Fed and the markets are trying to avoid. What is this end game? I recommend to understand more about the end game, you read the Financial Times of London. You really never see anything uh, comprehensive on it in the New York Times or the Wall Street Journal. They just don't get it. Again, the Financial Times, extraordinarily reputable financial newspaper in London. Let's look at the role of the Federal Reserve a little bit as to who they are and what they do. The Federal Reserve is a market maker in Treasuries. That's the best way to think of them. They're a player in the markets. They're not the biggest player in the markets by any stretch of the imagination. They used to be a dominant player. Now they're an excellent player, a great group of traders at the open market desks, but by no means the biggest. No way. If you look at their books, they play with $800 billion in their kitty, in their trading portfolio. The open market desk in New York City has $800 billion that they conduct repo operations with, customer repos and system repos, and they buy and sell Treasury securities, Treasury bills, Treasury notes, and even sometimes Treasury bonds, as in Operation Twist back in the 60s, and they did it also once in the 1980s. And they could do it again on the long end of the market as well, not just the bills and the notes. So they have $800 billion in their kitty. Well, that's a lot of money, but remember, there's $450 trillion in notional value in derivatives. And that's a bit of a misleading statistic. It's a bit like comparing apples and oranges, the notional value of derivatives versus the size of the Federal Reserve's portfolio for open market operations that it uses on a daily basis. But it still gives you a sense that the Fed is a player and not the biggest kid on the block in the money markets and in the treasury markets as well. China has $1 trillion in reserve, for example. Japan, I think, is at 700 billion at last count. The sovereign wealth funds, hedge funds, etc. The Fed is not the Fed can't control the market. Let's put it that way. The Fed can't control interest rates. Everybody at the Fed understands this, even if most Americans don't. Even if the American press doesn't understand it. Now, one thing that distinguishes the Fed from other market players, however, in treasuries and other areas of the market is that they do have inside information. And they trade on that inside information, and that helps them be profitable. They are a hybrid of a public and a private institution, and they try to make a profit and also maintain price stability in an environment where full employment is fostered. But they also make a profit. And they use that inside information to help them make a profit. What kind of inside information do they have? Well, for example, the Department of Labor statistics and other U.S. government statistics, we all know they move markets, whether it's capacity utilization figures for what percentage of our factories are being utilized, the employment reports, the unemployment jobs data, inflation data,